Good morning, everyone. I hope your day is starting off as fantastic as it can. In the background behind me here is a graph of the Dow Jones Industrial Average. January 20th or so is straight above me right here, where the Dow was peaked at about 45,000. That's at about January 20th when Donald Trump began his presidency, and the stock market stayed fairly flat and then started to decline and then dropped sharply here a couple of weeks ago, hitting lows just above 36,000. That was when the world reciprocal tariffs were announced, and then they were paused for 90 days. The market recovered a little bit, and just recently now, I recorded this as of Monday. The Dow is at 38,170. It was down 971 for the day. But I'm not here to give you any stock advice or to just predict what's going to happen with the Dow or to make any kind of a judgment based on one trading day. But it is true that the market is going down, and it's dropped quite a lot. From 45,000 to 38,000, that's 7,000 points or so. 7,000 from 47,000, so 7 out of 45. What's the percentage on that? You guys can figure out that percentage. I actually have to do it for myself, guys. 15%. So the market, the Dow Jones is down 15%. And for those of you who are not investors or don't really follow the markets, these numbers may not be too have much meaning for you, and you may not even connect how this would really impact you unless you own stocks in the market or how this could impact your life. But to put it in a little bit of a perspective on how much money this is, the value of the stocks on the Dow Jones dropping this much represents about a loss of $4 to $5 trillion worth of wealth. That's equivalent to approximately how much the United States spent fighting World War II. The estimated cost of World War II to the United States was around $4 trillion. It actually cost in 1945 $296 billion. Oh, inflation is a hungry thing, isn't it? Inflation adjusted cost after adjusting for inflation, the U.S. war cost today would be $4.1 trillion. So that kind of gives you an idea of the scope of the market decline so far. But I don't want to just focus on the stock markets. There's other things declining. For example, the U.S. dollar. Here's a graph of the U.S. dollar index since the beginning of the year, starting back in January where it was 109 and now is 98. Okay, and the U.S. dollar index is the U.S. dollar versus a basket of foreign currencies. Why don't we look at a graph of an actual currency so that maybe the numbers mean more to you? Let's look at the value of the euro versus the U.S. dollar. And the euro started the year at approximately $1.03 US, almost on par. So 1 euro was almost equivalent to $1. And right now, 1 euro is worth $1.15. So the euro has gone up about 15%. So the US stock markets are down and the US dollar is down versus most other major currencies. You have headlines like this from Reuters. Investors pour into European equity funds, flee the U.S. on tariff woes. More headlines in the news like 10-year Treasury yields rise as investors weigh Trump's criticism of Powell. Who's Powell and what is a 10-year yield? Let's keep going on some headlines here. Trump again asks Fed's Powell to lower rates, calling him a major loser. There's a lot happening in the markets, guys. Powell is the chairman of the Federal Reserve, which is the central bank in the United States. And the president is now calling him a loser and wants him to resign and is trying to influence his decisions. Let me read exactly what the president posted and said about Jerome Powell on his Truth Social account. He wrote, the ECB, the European Central Bank is what that stands for. The ECB is expected to cut interest rates for the 7th time, and yet too late Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Too late should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. That's exactly what he said. And just a little aside here, because I am mesmerized with the mainstream media. And you can search the internet and you'll, like the headlines I was just showing, find 200 articles about the issue of what's going on between Jerome Powell, and the president. And you won't find this, right? That's exactly what he said. And every article you read is just a little bit of a spin or an opinion or a half a sentence taken out of this, or just a paraphrasing, or the media outlet will try to massage or spin the information so that it fits and is accepted by whatever the ideology of their audience is. It's absolutely ridiculous. So I wanted to read it word for word. And this is, I just got, let me keep going here. I have to say that Donald Trump has completely outmaneuvered and outflanked and outsmarted the media in the world. Okay, like this is his simple strategy, and I'm going to tell it to you here on this channel, and hopefully you'll consider supporting this channel as just an independent source of information, because this is not opinion, right? This is exactly what he said, and this is his typical pattern. Is he will float something on social media, on Truth Social, and he posted this October 17th at 4:12 a.m. 4 o'clock in the morning. He posted this on Truth Social. Truth Social is where his base lives. His typical strategy is to post whatever he wants on Truth Social, the most extreme, the most ridiculous, the most inflammatory, anything he wants. If you go to his Truth Social page, it's hundreds of posts a day sometime at all hours of the night. And he'll just spam that page with rhetoric, and then he'll analyze how the media, the mainstream media, maybe picks up on some of the things he posted and how it plays out on television, on CNN and Fox News and MSNBC and on some of the larger talk shows or podcasts, and you'll see how it plays out, right? And what starts sometimes as a complete off over-the-top sentence of rhetoric, if it's received really poorly as it's broadcast and discussed over the whole media system, all range of political affiliation, if it's received completely poorly, then the excuse was, that was just a post that he made on Truth Social at 3 o'clock in the morning. Don't take that one seriously. He says lots of stuff. If, on the other hand, one of his extreme comments plays out more positively and perhaps morphs into something that uninformed people absorb in it and in the media could accept or rally behind, then it quickly becomes policy. So it's like he goes fishing, like the posts on his Truth Social are the canary in the coal mine, and he can float something like Powell's termination cannot come fast enough, ! And see how that plays out. If the canary dies, so to speak, then this will be a one-off post and you won't hear anything like this ever again. Maybe there'll be a lot of people that, he should be terminated. It might gain traction. And if it does, within a week or two, this could be official government policy. That's how he plays it. And the media just plays into it. They just play his game. He floats it out there, and the media, oblivious to what's going on, just tries to get their clicks. And the media does the job of doing the polling and seeing what the reaction is. And then policy is determined. It's absolutely a brilliant strategy. It's like the media are pipsqueaks being played by a genius. It's like Muhammad Ali in a boxing match versus a 10-year-old. The media has no idea how they're getting played. It's absolutely insane. And you won't hear any type of discussion like this on any mainstream media channel. They actually think that they're reporting news when they take snippets of some of his posts and paraphrase and spin what he says on Truth Social. They have no idea how they're getting played. I thought I just mentioned that to you. I've got no political affiliations. I'm just presenting you with some of my ideas and analysis. But I see this happening. It's so obvious. He's completely played the media like no one has ever before. If you're fascinated with my perspective, subscribe to the channel and maybe consider becoming a channel member, and we'll have many more interesting discussions in the future. But that's what he actually said. Now, just because he said it doesn't mean it's true. And what we're looking at now is a graph of the United States federal funds rate, which is the interest rate that the Federal Reserve controls, that Jerome Powell controls. And if I move my head here, you can see that that funds rate was at 5.5% when the Federal Reserve increased interest rates to fight inflation. And since October has dropped to 5%, and then it dropped again to 4.75%, it dropped again to 4.5%, and now has been held steady for the last couple of Fed meetings at 4.5%. So the Fed has lowered interest rates, but it hasn't lowered interest rates as fast as Europe. And there's many reasons why that's the case, which we're not going to get into. Now, why is it odd or concerning for a politician to want to fire or influence the governor of the Bank of Canada or the chairman of the Federal Reserve in the United States? And the reason is this, that the central banks in G7 countries are independent from the governments. Now, the government's job, after they get elected, is to govern. And their ambition, usually, while they're governing, is to get reelected in the next election. The central bank of a country, like the Federal Reserve in the United States, their ambition is not to get reelected. Their members get appointed for a certain period of time, and they have a different mandate than the government. The mandate of the Federal Reserve in the United States is very specific and almost exclusively to keep inflation within a certain range which is deemed beneficial for the long-term growth of the nation. And I'm on the Federal Reserve website here. You can go here and click around and read their announcements and their mission and why they exist. But you can see that the ambitions of a politician may be different than the ambition of a Federal Reserve chairman. For example, a politician whose policies are making the stock market go down may really want the stock market to stop going down and may really want the Federal Reserve to lower interest rates, which will probably cause the stock market to, at least in a short-term period, go up. When the Federal Reserve lowers interest rates, especially if it's a surprise, the market usually reacts with euphoria and goes up. So from a political point of view, a politician may want that to happen at any particular time to help him politically, but it may not necessarily be the best thing to do at the time for the long-term mission of the central bank, which is to keep inflation in approximately 2% range. It's not too low, it's not too high. It means things keep expanding at a nice, steady pace. That's their mission. Or, for example, what about when there's an election? Every 4 years there's an election in the United States. Every 4 or 5 years there's an election in Canada. Wouldn't they really want the central banks to implement policy that will cause a short-term surge in the stock markets and maybe make borrowing cheaper? Wouldn't they really like the central banks to lower interest rates every time there's an election? That may not correspond with a good time to do that. And if you don't think politicians will do that, well, here in Canada, politicians always do that. Whenever there's an election, they spend money like drunken sailors, making promises and spending initiatives. And in fact, in Canada, they go so far as, just recently in Ontario, there was an election, and timed to that election, a provincial election in Ontario, timed to that election, the government sent every resident of the province money, a check. They mailed people checks. The government is running a deficit, but it's an election. So they came up with an excuse that it would be a good time to just mail money to people. That's the type of thing politicians do. And so it's always been thought that the central bank and the government, politicians and the central bankers should operate separately and independently. So you can see that it would be very concerning for the markets if they believe that the President of the United States could influence the chairman of the Federal Reserve, or potentially fire him and maybe install someone else that he likes, someone that will do whatever he says, maybe an ex-Fox News host, as the new chairman of the Federal Reserve. That would be very bad news, and the market wouldn't react very well to that. There would be a lot of uncertainty. Now, why would the president want Mr. Powell to lower interest rates? And why is Mr. Powell not lowering interest rates? And what could happen if he does or he doesn't? These are very complicated questions. What would happen if Mr. Powell says, "You're right, Mr. President, I will lower interest rates now"? What will happen? I'll propose to you that I don't know the answer of exactly what would happen, and neither do you, and neither do 99% of people that post videos online have any idea what would be the ramifications of Powell lowering interest rates, say a half point. It's very complicated. That's why we have expert economists that work in separate entities, the Bank of Canada, the Bank of England, the central bank in Japan, the U.S. Federal Reserve. They work independently from their governments, usually in a coordinated effort to come up with monetary policy, interest rate policy, quantitative easing policy, stimulating policy, or restrictive policies. It's very complicated because when you start pulling the levers, the fiscal levers in the economy, there are many possibilities and lots of unintended consequences. For example, let's go back to the graph here of the euro versus the US dollar that we looked at earlier. And I know the president in his statement said there's no inflation. Well, what do you think happens when from January till now, the euro goes up 15% versus the US dollar? Anything that the US wants to buy from Europe now will cost 15% more than it did in January. This is the exchange rate now. So $1 US will buy less from Europe than it did in January. This will result in inflation of imported goods from Europe. Now, what is a consequence of lowering interest rates for a central bank in a country? Generally speaking, it may or may not happen, but generally when a country lowers interest rate, short-term bond yields go down, and it affects the currency. Usually when a country lowers interest rates aggressively, the currency falls because investors usually chase higher yields in short-term treasuries. So lowering interest rates could make the US dollar fall more. If the US dollar falls more versus other currencies in the world, the US being the biggest importer and the biggest consumer in the world, everything will cost more. So possibly lowering interest rates would cause a lot more inflation. Tariffs are going to cause inflation because despite what some people believe still in the United States, those tariffs are basically a tax that's paid by the US importers. The word tariff is just a name that we've assigned to a tax on an import. If you import something and you tax it, we call that a tariff. So United States importers will pay this tax and they will pass on the price or a portion of the price to U.S. consumers. So there will be an uptick in inflation from tariffs. But then on the other hand, maybe the tariffs will be so high that it'll simply stop economic trade from some countries. Maybe the cumulative loss of wealth from the stock market drop and the exchange rate change will change Americans' importing habits. Maybe that'll cause a slowdown in the economy. It's very complicated to figure out what's going to happen. But here is the key thing. In a situation where your currency, your stock market, and your bond market are all going down at the same time, and those things are triggered because of the president trying to interfere with the independence of the central banking system, the Federal Reserve, and using rhetoric like calling the guy a major loser, and trying to influence his decisions, this is creating uncertainty in the market, and not just in the US market, but in the world market in this way. The US has always benefited from its standing in the world. The US is the largest consuming nation in the world and imports more goods than all other nations. And it has an advantage in doing this because it's had a very strong dollar, a very strong currency, and a very stable bond market, and it is able to borrow lots of money. Why is the U.S. able to carry such a huge debt in the tens of trillions, and it is able to easily borrow more money? And the reason for that is because the world trusts that investment. The world trusts the United States. When a country or a person buys a U.S. Treasury bill or a U.S. bond, even a 10 or a 30-year bond, they trust that when they buy that bond, a 30-year bond that's going to pay 5% per year for 30 years, they believe without any doubt that they will get their money every year. They'll get their interest payment every year. And at the end of the 30-year period, they will cash out and get their principal back. And it will be a safe, sound investment, the safest investment in the world. But now all of a sudden, you have a situation where investors are starting to think, maybe it would be safer to diversify a little bit and maybe buy some European bonds. Maybe I need to cash in some of that American exposure to stock markets and American exposure to the bond market. Maybe people's perception of safety is going to start changing. Changing of people's perception, it's a very delicate thing to try and explain. It's not rules that are written in a book or a set of procedures that have to be followed. The reason that the world economic order is the way it is, and that the US is the dominant currency and the dominant lender and the dominant holder of world assets, is because of a delicate thing called trust. And if that evaporates and all of a sudden we end up with a crisis that involves the trust in U.S. treasuries and the U.S. bond market, or the U.S. ability or the U.S. willingness to honor the payments that they have to make. How far-fetched is this if the United States president right now is referring to the chairman of the Federal Reserve as a major loser if there's a crisis in the bond market, or if investors start demanding much, much higher yields for their holdings of U.S. bonds and treasuries, so that the U.S. debt carrying costs get higher and higher and higher as those yields go up? Do you think it's far-fetched that maybe this president, maybe he'll lash out and start blaming other countries like China or countries that hold large amounts of U.S. treasuries and bonds? Maybe he'll lay the blame at them and threaten retaliation. Maybe he'll threaten that, well, we just won't pay you. Well, we just won't pay. Do you think that's a possibility? I don't know if it's a possibility. This guy could just come out and say, oh, I think it's China's fault, and they're treating us very badly, and we've subsidized them for so long, and now they want so much more percentage on their bond. They want to make more money from us. They want the yield to be higher. It's their fault. Well, we just won't pay them. How about that? We deserve that money. It's not their money. It's our money. We just won't pay them 7%. We'll pay them 2%, and if they don't want 2%, we won't pay them back. Do you think that's a possibility? The answer to that question is that nobody knows. And anyone who claims that they know what the plan is, or they know what's going to happen next, they can back-explain what's happening and try and convince you that this is some master plan of tactical negotiations that's happening that us mere mortals don't understand. Nobody really knows. I don't know. You don't know. 99% of the analysts and highly educated economists have no idea what's going on and have no idea what's going to happen next week. But the reason I'm making this video, I'm not putting forward any advice. I'm not predicting anything. I've fully claimed that I have no idea what's going to happen. But the big warning, the big red flashing lights are that if this type of uncertainty and chaos somehow permeates itself into the fabric of the United States banking system, the bond market, the treasury market, and the trust that the United States has built up since World War II with the whole world, and its reputation as the safe haven investment in the world. Whenever there's a crisis in the past, whenever there's been a crisis, there's always been a flood and a flight to quality and safety, which was U.S. treasuries, U.S. bonds. And now that this chaos is happening, there is a flight to quality, but that quality today is gold. And this is the graph of gold from January till now. So in conclusion, guys, trust is a concept. Trust is a very flimsy thing that takes forever to build up and very easily can be destroyed. If this turns into a crisis, turns into a major crisis, then tariffs are going to be the least of the United States worries. The price of eggs is going to be the least of your worries. What about the servicing costs on a $20 trillion plus dollar debt? this is really serious stuff, and I have no answers, but I just wanted to do this video to kind of just put out there what's going on. Because you watch the news and you see these headlines, and each individual headline sounds like, well, you know, it's the bond market. It doesn't really, I don't have anything to do with the bond market. I don't own a lot of stocks, and I'm not really worried about the US dollar. I'm not going to travel to Europe, so I don't have to exchange any dollars for euros. But remember, all this stuff is very complicated. It's all interconnected, and there's reasons that this is happening, and there's reasons that we have educated experts that run central banks around the world, and there's reasons that those central bankers remain independent from governments. And if this line starts to blur, I don't know what's going to happen, and nobody else in the world knows what's going to happen. So anyways, leave some comments, because I'm sure some of you think you know what's going to happen or have an idea, and we can share it in the comment section here, and we can try and entertain ourselves in pretending like we know what's going to happen. At least you guys. I don't know what's going to happen, but I'm sure you guys will leave some comments and let me know what you think is going to happen. Thanks for watching. Subscribe to the channel if you're enjoying the content. Consider becoming a channel member if you want to support the channel, and I will catch you guys on the next one.